And today is the final trading day of 2025, a year defined by tough reforms, some market volatility and cautious optimism. From elevated interest rates, exchange rate adjustment to shifts in investor sentiment and sector-by-sector realignment, Nigerian markets have had to navigate both domestic pressures and global uncertainty. Well, I'm Ladi Williams, and this is Business One. Let's bring you some of the top stories from today. Now, we'll see with oil prices trading largely flat today. It's not been a good year for this market, so far. And, some would say that's good, for fuel prices. That's good for global inflation and all of that. But, $61.28 a barrel. Now we see Brent, trying to hold on to the $60 level at this last trading day. Now, WTI crude, $57.90. That's been, sub $60 for most of this quarter. And definitely this start off the week strong, but now we're in the red zone, flat closes so far. But it's been the range trade, so far for the oil market. But, down, if you look at it overall from the start of 2025. All right, let's look at the NGX now. Yesterday closed higher in the session with the NGX All-Share Index advancing 42 basis points to 155,034 points there. Pushing yesterday returns to about 50.63%. Market gains were driven by renewed buying interest in Boa Foods. Again, just like the previous trading session, Transcore and Boa Cement. Trading activity, we see that strengthened. I was looking at trading activity. Volume surged 290% to 4.68 billion shares. That was traded. Value, that was about 35.53 billion. Cornerstone Insurance dominated activity, emerging as the most traded stock by both volume and value, alongside FCMB, Wema Bank, and Zenith Bank. Financial services there. Then we see sector performance was broadly positive, with insurance, consumer goods, industrial, and oil and gas indices closing higher, while the banking sector ended the session in negative territory. On the gainers chart, Guinness Nigeria, Honeywell Flour, Julius Berger all posted the maximum daily increase, while Union, Dickens Salt, Living Trust Mortgage Bank, and First Holdco led the decline. As we've seen, First Holdco, there are a lot of profit taking, mostly from that run we had earlier in this month. All right, to other matters now. From the CBN, we have data. Yeah, kudos to the CBN. It's coming really fast. Nigeria's private sector ended 2025 on a high, expanding at its fastest pace of the year. The CBN's latest PMI shows the composite index rising to 57.6 points in December, up from 56.4 points in November, signaling stronger economic activity. Output climbed to 60 points, while new orders rose 58.7 points. That's also pointing to higher demand. Employment inventories also improved, with the employment index at 54.2 and the raw materials inventory 54.5, highlighting ongoing job creation and better stock availability. At the sector level, industry activity expanded, led by transportation equipment, while contractions in paper products, that was mostly marginal, right there from the data from the Central Bank of Nigeria. And now, the National Insurance Commission announced that they're engaging the services of 4 companies to conduct an independent verification of insurance firms ahead of the insurance sector recapitalization, which is slated for July 30th, 2026. Deputy Commissioner for Insurance Technical, Mr. Usman Jankara, who was speaking at a meeting in Abuja, explains that the independent verification, as well as the recapitalization exercise, will help ensure confidence while attracting investment to the sector. Take a listen.
We are creating a future built on strength and integrity. The ongoing recapitalization exercise in the Nigerian insurance industry is more than just a regulatory milestone. It is a bold transformation that will redefine the Nigerian insurance industry for global relevance. By raising capital thresholds and introducing a risk-based capital framework, we are laying the foundation for a stronger, more resilient insurers, capable of underwriting complex risk and driving national development. To ensure absolute transparency and credibility of that process, we are leveraging and collaborating with the Big 4 auditing firms for independent verification of capital. This approach is to ensure and guarantee confidence, fairness, and trust in the process, reinforcing the industry's commitment to global best practices.
And definitely, it's still a time, to take stock. And today, we're taking a close look at Nigeria's fiscal landscape in 2025. As we launch a review of fiscal policy, the year has been marked by a mix of, policy reforms, revenue adjustments, and strategic spending decisions, all aimed at supporting growth while managing fiscal pressures. This next report, our business editor, John McCraw, takes a look at what's played out so far in 2025. Take a listen.
On the first day of 2025, President Bola Tinubu reassured Nigerians of his administration's commitment to intensify efforts to lower costs by boosting food production, among other things. His target was to reduce overhead inflation from 34.6% to 15%, a target which has been hit as headline inflation for November 2025 dropped to 14.45%.
In reality, the inflation rate has declined year-on-year inflation. And it has come down for 4 primary reasons. 1, the exchange rate stability has meant that people are not factoring an exchange rate devaluation into their pricing. 2 was that the broad money supply, which was as high as almost 50% last year, had dropped to as low as 10%. The target normally is at about 15%. So money supply reduced, exchange rate reduced. The price of petrol, which drives petrol and diesel, also dropped from 1,100 all the way to what it is now. It was 800 during the October-November period.
The administration received a lot of applause during the year for progress in macroeconomy. For instance, the gross domestic product grew from 3.84% in the fourth quarter of 2024 to 3.9% in the third quarter of the year. Rebasing the GDP brought higher contribution of the services sector to the fore, indicating a level of progress in the effort to diversify the economy. The year was a period of relative exchange rate stability, where the naira was valued at below 1,500 naira for a dollar for most parts of the year. A lot of this has been attributed to the decisions and interventions of the central bank.
We have a competitive currency, and it's something that you will hear me talk about over and over and over again. Our currency now is more competitive. So this should encourage exports. And indeed, for us as Nigeria and Nigerian businessmen, the opportunity to extend that dragnet into our sub-region is also an enormous opportunity now that we have such a competitive currency.
Presented by the chairman of the MPC.
The Monetary Policy Committee took tightened stance most of the year and only cut the monetary policy rate by 50 basis points to 27.0% in September, and that was the first cut since 2020. These actions and decisions, many economists believe, have placed the economy in a better state than it started the year with, as evidence in data. For instance, there's the foreign exchange reserve, which was at $39.72 billion by the end of January 2025, but hit $46.7 billion in mid-November, although it declined later to approximately $45.24 billion as of December 23, 2025. According to the NESG Stanbic IBTC Bank Purchasing Managers Index report for January 2025, productivity in the private sector dropped from 52.7 that was recorded in December 2024 to 52.0 by November. The trend had reversed though, as records show continued private sector expansion, with the headline index at 53.6, slightly down from October, which was at 54.0, but staying above the 50-point expansion threshold for the whole year. Key drivers for this include a sharp rise in new orders driven by new products and better demand, as well as growth across all sectors. There are even more pleasant memories in 2025. Top on the list is Nigeria's status changing to a country that now exports refined petroleum products, and that's thanks to Dangote Refinery and Petrochemicals. Records indicate that as of December 2025, daily production from the refinery is between 40 and 45 million liters of petrol daily. Between June and July 2025, the refinery exported approximately 1.35 billion liters of petrol to international market, officially making Nigeria a net exporter of refined products for the very first time in nearly 30 years. And still in that sector, crude oil losses dropped to an average of 9,600 barrels per day between January and July 2025. That's a significant reduction from the 102,000 level that we had in 2021. Nigeria was also removed from the Financial Action Task Force grey list, improving investors' confidence in the country. Nigeria's equity market brings another positive story for 2025. It started in January at 102,926.40. Investors' interest in the market continued until it peaked in October, when the all-share index was at 154,126.5 points. About a month later, investor sentiment reversed, and the market experienced the biggest single-day drop in what has now been termed a bruising single-day crash, where the market lost approximately 4.6 trillion naira in valuation. This was partly attributed to misconceptions on the capital gains tax. The market has since recovered as the all-share index reversed its trend to a positive trajectory. However, most of these positives did not translate to microeconomic growth, especially in the number of Nigerians who have become poor. The National Bureau of Statistics indicate that in January, 133 million people remained multidimensionally poor, lacking access to essential health care, education, and basic infrastructure. At the end of November, the number had jumped to approximately 139 million people.
My description will simply be akin to farming. When you plant seeds, those seeds must die first before they start growing again. So Nigeria is in that phase. We're putting a lot into place, and those results we're only going to start seeing over a period of time. I do understand the anxiety, but for me, we all have to be patient.
We are on the right path with the economy. If you look at the growth rate that was recorded in the last quarter, if you look at the exchange rate stability, we're on the right path. If you look at the inflation rate, we're on the right path. All we need is a stability, a consistency of growth, a consistency of stability that we now have in this market.
Very much.
Translating the gains to the micro level is expected to be a priority for 2026, captured in the spending plan for the year, one which President Bola Tinubu has submitted in a 58.18 trillion naira appropriation bill.
By March 31st, 2026, all capital liabilities from previous years will be fully funded and closed. From April, Nigeria operates on a single budget, backed by a single revenue cycle. No overlaps, no excuses, no rollovers culture.
Even for the budget, there are concerns on the parameters proposed in the 2026 bill, with the question of it being realistic and the need for more attention on debt management in the coming year, especially with an expected deficit of 23.85 trillion naira.
Who owns 49% of a 6-train LNG plant and goes to Eurobonds to be borrowing $2,000? The world will be looking at you. You own 49% of a 6-train LNG project, and you are capping and looking for you are borrowing at 9%. So let's get that. We don't need to borrow one dime. We don't need to tax anybody. Let's make Nigeria's assets generate revenue for Nigeria.
Another prominent conversation in 2025, which will spill over to 2026, is a tax reform. The Presidential Committee on Fiscal Policy and Tax Reforms was approved in July 2023 and formally inaugurated on August 8, 2023. The committee, chaired by Mr. Taiwo Yedele, was established to address challenges in fiscal policy and taxation, with a mandate to simplify the tax system. They have the target of not to increase taxes, but enlarge the tax net and achieve a tax-to-GDP ratio of at least 18%. And this comes with some changes expected to take effect from the very first day in 2026.
These reforms are designed to provide relief to the Nigerian people. Bottom 98% of workers will see either no PAYE tax or lower taxes to be paid. Small businesses, 97% of them, will be exempted from corporate income tax, VAT, withholding tax, and large businesses will see a drop in the taxes that they pay. The whole idea being to try and promote economic growth, inclusivity, as well as shared prosperity for our people.
Equally important in 2026, according to economist and Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rwani, is the possibility that focus may be divided.
So the whole electoral process is expensive because the stakes are very high. So that is when we accept that the price of oil drops, government revenue drops, the funding of the deficit becomes a problem. And added onto that is the spending that goes with the electoral process, which is natural. There's nothing you can do about that, right? Democracy is expensive, right? And the money goes into the system and it creates what we can call some form of overheating of the economy. Do you have the tools and instruments to bring that back down to normal? Yes, you do, but it will take a lot of, how would I put it, a lot of policy realignment and a lot of acceptance of the fact, because you have to understand something, that GDP growth is going to be around 4, maybe 4.2%. So if you have GDP growth is productivity, right? Without equity, if it is not equally shared around the country, gives you insecurity, and that's a recipe for crisis.
Well, it looks like 2026 will be an even more eventful year, especially as political leaders may give more attention to their ambitions ahead of the general elections in 2027. While on the other hand, the people are anticipating more gains from the reforms, especially at the microeconomy level. I wonder which one will have prominence and what the story will be by December 2026. I'm Ini John Mekwa reporting for Channels Television News.
Thank you, Ini, for that report there, painting a nice picture of what's played out so far with fiscal policy in Nigeria and, getting an outlook for 2026. Well, that's tomorrow, and countdown to January 1st. So many things starting January 1st, 2026. But now we're taking a conversation to find out how the consumer in Nigeria has performed in 2025. As we look toward the near future, the continent's retail sector is standing at a fascinating crossroads there. Traditional price is king mantra is being challenged by more nuanced consumer psychology, one that, prizes human connection, seamless convenience, and cultural resonance just as much as a good deal. In this conversation, I will unpack how retailers can navigate the complexities of economic volatility while leveraging cutting-edge technology like AI to build deeper, more resilient bonds with their customers. Joining me for this conversation right here in the studio, I have Professor Uchenna Uzo, a Professor of Marketing at the Lagos Business School and Director, Africa Retail Academy. Joining me right here. Great to have you on the show, sir. Good morning.
Good to be here in person for the first time.
Fantastic. I've always had you most of 2025, via Zoom, with your own nice studio too, right there. It's great to have you here. And, definitely that report painted a picture of what's playing out with fiscal policy in Nigeria in 2025. Everyone's trying to get a sense of what's going to happen, in 2026. And, before we get into it, I'd like to get your view on how the Nigerian consumers fared, in your opinion, in 2025.
2025 wasn't an easy year for consumers. There was a lot of frustration. There was a lot of pain because of the high level of inflation. But there was also a lot of resilience. Nigerian consumers are very smart in their spending behavior, and they were able to reposition their spending habits to appeal to the situation. And I think that they are more resilient now towards the end of the year than they were at the beginning of the year. And we're seeing that even in the way people are spending at Christmas time, that even though things were tough, somehow there's still something left to spend in a bigger way in this season.
Right, and I can imagine I just got back, coming into Nigeria and also spending. I'm sure they were more resilient.
Exactly.
We're going to get all of that data, at some point. But, let's look at consumer loyalty, so far. How loyal, were the consumer? Because you said they did, try to look for better deals and all of that. And I'm sure that would somehow trump loyalty.
Exactly. So it's very interesting. I don't know if you know that Nigeria ranks as one of the countries with the highest level of customer disloyalty in the world. So currently, globally, 5 in every 10 customers is brand disloyal, globally. And the projection is that in 5 years, it will get to 6.5. But in Nigeria, the current number is 7, and in 5 years, it's expected to get to 8. Now, the interesting thing is why disloyalty is rising. What is fascinating is that price is not really what is driving more disloyalty in Nigeria. It's more about the inability of brands to deliver a consistent experience at scale. Experience has taken over pricing when it comes to loyalty. And I think that is something very interesting to keep an eye on as we move into 2026, because those brands that are able to deliver a unique experience at scale are the ones that are going to keep customers loyal. Disloyalty in Nigeria, I call it polygamous disloyalty, in the sense that today you have people loyal to a brand, tomorrow they are elsewhere, but next week they may come back. And it's not only about price. In fact, we're seeing people who left because they wanted cheaper alternatives coming back to more expensive alternatives because the experience is better. So experience is key at the end of the day.
Right, and how do you think, brands can, key into this experiential, factor when it comes to, keeping consumers loyal?
So there are 3 things about experiences that brands often forget. And at the same time, these are the 3 top pain points of Nigerian consumers. I think the first one is there are a lot of service providers and brands that overpromise but underdeliver. So you see that in their websites, you see that in their adverts. You just don't get, there's a big gap between what was promised and what you get. And I think that's something that causes a lot of frustration. The other issue that is also there is the way complaints are managed. And this is critical for an experience. Customers complain about something they don't like, but then the response time, the way is as if sometimes service providers behave as if they are doing customers a favor. And people are becoming more sensitive to that. And then the other one is the lack of empathy. So these 3 issues put together are critical building blocks for a remarkable experience that customers and consumers are looking for in Nigeria. And when that is not there, it shouldn't be surprising that loyalty is being affected.
Right, and when you talk about that, we've seen instances where maybe a consumer is not satisfied, with a product or service, and makes complaints. But the sellers are normally they're not quick to say, you know what, let's replace this.
Yeah.
For you.
Absolutely. In fact, there's some data that shows that currently Nigeria is one of the countries with the highest level of service appetite. Let me put it this way. The customer's appetite to be served is way, way, way up there. But the service response level is way, way, way down there. So there's this big gap between service expectation and service response that any business that is able to fill that gap will already be at an advantage.
Right, and I'm sure some of them, they're reluctant to, replace, products and goods and all that because they don't want it to affect their profit.
Yeah.
So are we going to see impact on profitability if we see some of these, producers actually say, you know what, we're here for that consumer, we're ready to, replace whatever. If you're not satisfied with this product, we'll replace it immediately. How does that impact profitability, going forward for this movement?
Well, profitability at the end of the day will come from delivering unique value that the customer can identify. So, and value in the end is offering a remarkable experience that you can replicate over and over again. And when you're able to do that, you can command a higher pricing than your competitor. And therefore, profitability, if people are able to manage their costs very well, will be assured. I think the problem is that a lot of businesses focus too much on short-term thinking as opposed to long-term strategic thinking when it comes to engaging customers. We want to make money now. But the real value is on working towards the long term, offering unique value by offering remarkable service experience.
Right, and when you're interacting with a company, most of the time you have to deal with, the salespeople. Does it go beyond just making that sale?
Well, it goes beyond it. It's good you've brought this up because the latest data, and I found it surprising, shows that Nigerian consumers are more loyal to the salesperson selling brands than the brands they are selling themselves. We've seen this across several sectors: banking, hospitality, retail. People are even ready to move with their favorite salesperson to a competitor's outlet because of that relationship that has been built. So salespeople are not just there to sell, they're critical experience providers, relationship builders. The way they communicate, even the way they talk, is part of the overall experience around the brand. And that is why, as we enter into 2026, it's very important for people to take a second look at how they manage talent. Not just the salespeople, but everybody involved in delivering a unique experience, because that will matter a lot for loyalty.
Yeah, because I've had instances where I just, said, I'm not buying from this brand because of the experience I had.
Absolutely.
With a salesperson. And, at this point, how is that within the brand's control? Making sure that the salespeople actually, do right when the brand owners are not watching.
I think it is. The problem that we see is a lot of brands focus on the external, the look and feel, the external campaigns and adverts and experientials, looking at the external side of their image and not paying as much attention on the internal side of branding. Those who are going to project that image, how much they connect with the brand. And once there's this mismatch, what you are going to find is that the customers, what they see when they interact with the brand externally through adverts will be different from what they experience when they walk into an outlet or they engage with people directly selling that brand. So there's a need to close that gap, and it's within the control of the brands to take better care of the people who sell and push those brands.
Right, and right here in Nigeria, we've seen inflation, according to the data, that's been trending downward by 14%, so far, but there's still that affordability, issue, at this time. How can, these brands, navigate, pricing strategies, going into 2026? Because it seems the affordability issue might still be there.
Obvious, it's going to be there.
Right.
I think one very important thing that brands need to focus on is to know that pricing should be based on real insights, consumer insights, and not just cost and margin considerations, which is easier to do. We always believe that we tend to believe the biggest reason why people are not engaging with brands is affordability. But the truth is that it's not just about affordability. It's about offering something unique, something unexpected that solves a problem at an affordable price. And let's not forget that Nigerian consumers want the highest possible value at the lowest possible price. So how you manage that dynamic is very important. And Nigeria is not one market. So depending on the region where you are, how people respond to pricing, how they behave when it comes to pricing will vary. So we really need to think differently about how we see affordability and pricing in Nigeria.
Right.
Given what's going on.
Right, and some brands here, they sell domestically and they also export.
Yeah.
At this time, we've heard instances, especially from Mr. Dangote, that the reason why his cement is cheaper, abroad, and more expensive here is because of what he has to go through with taxes.
Yeah.
In Nigeria. So at this point, you have to manage price sensitivity of consumers, especially when there are other competitors, at this point. What's the strategy,
Very
for
good
that?
question. So the first thing to know is that price sensitivity in Nigeria defies logic. So price sensitivity, you cannot plot it along one line. The way people in northern Nigeria demonstrate price sensitivity is quite different from how people in the southwest demonstrate price sensitivity. And the first place to start is to understand those dynamics. Also, there's variation in how people at different income brackets demonstrate their price sensitivity. And I think the biggest surprise for me this year is that there are a lot of people who sell brands and brand owners who are even more price sensitive than the customers they are selling to. And that is coming from the fact that they believe that affordability is the only reason driving why people want to buy. And because of that, they build everything around discounts, loyalty schemes that are price focused. And guess what? Only 9% of Nigerian consumers really stay loyal because of discounts. Only 9%. And so there's a need to rethink what price sensitivity really means and how it affects the way people should price and when they should change their prices.
All right, so I'd like to get your crystal ball out now. Going into 2026, what are you seeing for the average consumer, in Nigeria and Africa, and the retailers, the businesses? What are you seeing?
Okay, so again, one big thing there are two big things that will happen in 2026. One is we know our new tax law will finally take effect. And then we know it's a pre-election year. And we know what happens in terms of spending behavior. People become more cautious when it comes to these kinds of scenarios. One interesting thing that we've seen in 2025 is the way spend priorities have evolved. So beer and spirits ended up being one of the fastest selling and the highest, let's say, spent items in Nigeria. Don't ask me why Nigerians like spirits or beer. But then the other interesting one is how childcare spending overtook personal health care spending and how transportation spending overtook spending on education and communication this year. What do I foresee for next year? You are still going to have the same top 10 items in the list of people's spend priorities. But the positioning is going to vary because people are going to look back and see how this tax law affects those different brands, because all those brands are managed by companies that have to respond to these new regulations. And so you're going to see some creative pricing strategies, and of course, customers are going to react to that. So it's an interesting time to see more cautious spending. But again, you're going to see those dynamics of loyalty playing out.
Right. So much to look out for in 2026. Thank you for painting a picture for us, Professor Uche Nelzo, the Professor of Marketing, Lagos Business School, Director, Africa Retail Academy. Thank you so much. And I'll see you in 2026.
We hope so, God willing.
God
Thank
willing.
you. Nice talking to you.
Thank you so much, sir.
Yeah, thank you.
All right, we'll take a break now. When we come back, we get more forecasts and the risks to some of the forecasts going into 2026. That's in a moment. Just stay with us. Welcome back. Well, we see 2025 has been quite the year. Earlier, we see the United States designated Nigeria as a country of particular concern and carried out security action in northern Nigeria targeting, ISIS-linked groups. Beyond the security headlines, this move raised deeper questions for investors, policymakers, and businesses. How does global perception of risk, how does that shape capital flows? What does this mean for Nigeria's growth outlook, currency stability and fiscal space, in 2026? Let's examine how, geopolitics is feeding into Nigeria's economic forecasts and what lies ahead. Joining me for this conversation, we have Basil Abia, co-founder Truva Intelligence, joining me from our Abuja studios. Great to have you on the show. Compliments of the season.
Compliments of the season, Ladi, and I wish you the best year
Fantastic.
in 2026.
I wish you the very best too. But we have a lot of forecasts rolling in at this point from investment houses. We also have from the Central Bank of Nigeria. They have their economic outlook for 2026, and they're seeing a GDP growth of about 4.49%. That's projected for 2026. Headline inflation expected to ease significantly, with estimates around about 12.94%. For the external sector, they're seeing the reserves hitting $51 billion. Current account, they expect a surplus. Fiscal and debt metrics, fiscal deficit about 12.14 trillion. That's about 3.01% of GDP. Public debt to GDP about 34.68% by end of 2026. These are projections by the CBN. And we have a couple of other projections, for 2026. And now we have, what's played out in 2025. Talk to me about how significant, the U.S. Designation of Nigeria as a country of particular concern, from a markets and investor risk perspective. How does this shape, most of the forecasts, we're seeing, going into 2026? Do we really need to take this into consideration?
Yes, Ladi, it's very important to take this into consideration. In fact, I was talking to a number of macroeconomists yesterday, and right now the consensus is that there's a volatility premium that has to be put into forecasts now. So most of the models that a lot of these investment houses and even the CBN has put out, there should be a recalibration of that. There should be a rejigging of those models, largely because of the perception risk that these attacks on Nigeria's macroeconomy and geopolitical future have. And it's very important to highlight that this is the most unprecedented kinetic action by the United States of America on Nigerian soil. Probably the only other publicly available information of a kinetic engagement was in the year 2020 when there was an extraction by the U.S. Navy SEALs of an American citizen somewhere between our border and that of Niger. So this is a very profound military engagement, and there's a lot of evidence, both in public and, of course, in private intelligence lens, to highlight that these kinetic engagements will continue, these military strikes will continue. I'll give you some insights that are not publicly available, of course. There's a new United States national security strategy document that was put out in November 2025. And in that document, particularly in page 29, there's also mention of Africa and critical minerals consolidation in page 23, as well as in page 28. But in this 33-page document, in page 29, there is a mention particularly of the intention to go into sub-Saharan Africa and counter Islamic, and I quote, Islamic terror networks in sub-Saharan Africa. And there's no doubt about the fact that this has now been corroborated by the engagement that happened on Christmas Day, or in some parts of Nigeria just after Christmas. Now, there's also some correlation, so to say, about another intention of the new U.S. national security strategy, which is to support a number of geopolitical engagements of their allies in the Middle East, where there's further adoption of the Abraham Accords by the Muslim world. And I'm quoting directly from that document that is not really popular in policy spaces here in Nigeria. So what am I trying to say here? What I'm trying to say here is that when this document was published in November 2025, people weren't paying attention. But just last week, Somaliland got recognized by Israel, and there is reliable intel saying that part of the negotiations for that recognition by Israel was that Somaliland will take 1.5 million Palestinians from Gaza particularly. So if you're correlating or inferring from this policy document, you're saying that there is a level of veracity to it. And if you connect it with that of Nigeria, in that same document, they're saying that they're going to engage kinetically against Islamic terror groups, while also concurrently deploying commercial diplomacy as well as consolidating critical mineral supply chain developments on behalf of the United States. So what I'm basically trying to say with these available documents, as well as with available open source intelligence, we should expect a continuity of these kinetic engagements, particularly military strikes in Northwest and Northeast Nigeria. In fact, there is reliable OSINT, or open source intelligence, that in the coming weeks, most of the attacks, largely led by the MQ Reaper drones that the United States Army has, they will deploy it on the northeast positions, particularly the Tumbuns of the Lake Chad. Tumbuns basically is another technical language or colloquial language for the islands that most of this ISWAP terror and JAS terror groups or terror targets actually stay in. So to answer your question more precisely, there is now a volatility premium risk that has to be infused to all the forecasts, especially with regards foreign direct investment as well as domestic investment. Especially, for instance, imagine if you want to make a final investment decision on some critical minerals assets in north-central Nigeria, and now there's, intelligence that there are going to be drone attacks as well as surface-to-surface missile attacks from the Gulf of Guinea hovering over. Let's not forget that shrapnels and missile fuel boosters were found in Offa. They were also found in parts of Sokoto outside of the actual sphere of the attack, in Tangaza local government area, particularly in Bauni Forest. And now it's in Bauni Forest that the two ISIS-affiliated target camps were actually, hit. And according to ground truthing from ground troops, particularly from the division of the Operation Fasanyama in Sokoto and in Kebbi, the ground truthing has confirmed that a number of fatalities have been incurred on the side of the ISIS-affiliated target groups. There's also open source intelligence now confirming thermal activity there, basically corroborating the veracity of the attacks, and also open source intelligence saying that there are now craters that you can obviously see. Now, basically, the technical language for that is that if you deploy a VIIR thermal system, which is a near real-time oversee of geospatial data, you'll be able to see the impact or the battleground impact of any missile attack.
All right, thank you for painting that picture there, and definitely you feel sometimes that some of these risks might be priced in or somehow, or maybe not. But how do you think local investors, international investors, how do you think they'll navigate all of this that could happen in 2026? Because geopolitics, that was with us in 2025, but it seems it's also going to follow into 2026.
Yes, I think what geopolitical experts are saying that, and they said it a lot in 2025, is because of a Trump-led geopolitical sphere right now globally, you have to prepare for anything. In all honesty, what were the odds that in January when we spoke about the forecast for Nigeria in 2025, what were the odds that we were going to get our first missile attack from a U.S. military source? Almost 0%. In that sense, but it happened, so with a Trump-led geopolitical sphere, it's very important to prepare for the worst, and this is the advice, this is the volatility premium risk that I was talking about. Now, let me go into more specifics. There are a number of sectors that will be shielded from the kinetic engagement of the United States military on Nigerian soil. We're already seeing or hearing that in whispers in terms of industry intelligence. for instance, deep offshore investments, we should expect higher activity or increased activity in terms of foreign direct investment in our deep offshore oil sector. Because according to whispers in the industry, thanks to the hard work of Madame Olu Verheijen, there are particular expectations that at least 2 oil majors would invest in new deep offshore projects. That should bring significant amounts of foreign direct investment into the country. So they would largely be shielded because, again, if you're looking at the kinetic strategy of the Americans, they're mostly going to use their drone systems to attack in the northeast, and in the northwest they will probably continue to use their guided missile destroyer located just around. We don't know the specific location. Obviously, Austin has failed in that regard, but we know that it's on the Gulf of Guinea that a guided missile destroyer called the USS Paul Ignatius is located, and they're going to continue their surface-to-surface missile attacks based on, as well as informed by intelligence, surveillance, and reconnaissance that has been carried out by the United States Africa Command in Germany since late October. So to answer your question more specifically, there are a number of sectors that will be shielded. Regardless, however, everyone should prepare for the worst. And then if you are exposed in northern Nigeria in terms of fiscal investment, so for instance, maybe you're now considering or you've already bought certain assets for geological surveys because you're getting into the Nigerian critical minerals frenzy, then you need to be able to do some risk insurance. It's very important to do that. If you're going to have a lot of portfolio exposure into FMCGs, fast-moving consumer goods, or agriculture in northern Nigeria, you should also get some risk insurance. It's very important because right now it's very likely that the theater of activity, not only just in terms of the U.S. intervention, but likely interventions from even Turkey, for instance. The news from Turkey that they just detained over 370 ISIS members in Turkey. So there's going to be a lot of activity in northern Nigeria, and you should be able to either de-risk or insure your exposure.
Right, and I guess, just like, any other year, just get your hedges right, going to, the new year. Fantastic. Thank you so much for helping us unpack this, and definitely we hope for the very best in 2026 for all of us. Thank you, Basil Abia, as a co-founder, Truva Intelligence. Thank you for coming on, and compliments of the season, and I'll see you in 2026.
Happy New Year, everyone.
All right, we'll take a moment now. Let's see what's playing out in the global economy. We have John McQuarrie with the details at this point. Countdown is on.
Laddie, you're so excited, saying see you next year. Tomorrow is next year, Laddie.
I know, it's just
a couple of hours.
It feels far, no?
And then, so when you say see you next year, it's like 365
it's like
days.
So far away.
So, see you tomorrow. Exactly.
No, see you in 2026.
Good morning, everyone. Welcome to the global news segment of Business Morning. I'll give you a bit of what's happening around the world outside our continent. We start this morning from China. We see the factory activity unexpectedly growing in December, returning to expansion. That's because of an uptick in domestic demand and new orders. Official purchasing managers' data shows this, and the official manufacturing PMI went up 50.1 in December from 49.2 in November, moving back above the 50-point mark that separates expansion from contraction. Economists had expected the index to remain steady at 49.2. So the ratio dog manufacturing PMI, just formerly the Caxton PMI, went up 50.1 in December, and the print was also stronger than expectations of 49.8. Cathy Woods is in the news again. Cathy Woods' ARC ETF published their daily trades for December 30, and it demonstrates a continued focus on biotechnology and strategic divestment in tech. Leading the day's transactions arc, they made a significant purchase of 145,153 shares of Intellia Therapeutics Incorporated, valued at approximately $1.326 million. And this move suggests a growing confidence in the gene editing company's future prospects. In another notable acquisition, ARC bought 50,963 shares of Twist Bioscience Corp across its ARC and ARC ETFs, amounting to about $1.67 million. And this purchase marks a continued interest in the synthetic technology. Nike Incorporated, look at the stocks at the close of trade as the year ends. It went up 1.6% in after-hours trading following disclosure that the CEO, Elliott Hill, purchased around $1 million worth of company shares. According to a regulatory filing with the Securities and Exchange Commission, Hill acquired 16,388 shares at an average price of $61.10 for a share. And famed investor Michael Burry has confirmed that he is not shorting Tesla, putting to rest speculations about his position on the electric vehicle maker. Responding on social media platform X, Burry, known for historic bets against the housing market before 2008 financial crisis, stated simply, "I am not short." Burry has previously taken bearish positions on Tesla. His latest statement indicates he currently does not hold a short position on that. All right, I'm still here, and I see Ladi has left his seat. I think Ladi has something packaged for this segment. Ladi, right. What do you have? It's the final day of the year.
Final trading day of the year.
Yes, I'll see you tomorrow in 2026.
Exactly.
Emphasis on that.
Exactly, and, at this time, we've had so many conversations, right here in 2025.
Right here, Ladi, from January the 1st, exactly. 2025 to the end. I think we should really be... Should we let's hold the prayer session first.
Right,
and give thanks to God. Yeah, it's been a whole lot this year, from Nigeria to President Trump and the tariff stories.
Oh, yes.
From January till date, the spillover effect back here in Nigeria. And I think another very big one for Nigeria this year was the tax. Remember how we lost that much money in a single day, 4.6 trillion naira.
Just from the capital gains tax.
Yeah.
Expectations, of that, and investors reacted.
And Mr. Oyedele really told us those are mostly misconceptions.
Right.
That led
so many
to that
misconceptions.
4.6 trillion naira, Ladi. I think would have been one of the best. I think we're about number 5 global best performing. Yeah. But would have been number 1 if not for that drawback in one single day. That was a huge one. Made history.
Incredible 2025. I want to say a big thank you to all the guests that have passed through this studio in whole of 2025. And we also have our back end guys that's been helping us.
It's not just us coming to talk. Even some of the information we give you. Yeah, a lot of people help us to work. Guys, come on in.
Yeah, we have a whole army.
So this is like 1/10.
Yeah,
because we have the camera guy right there. Unfortunately, he can't leave the camera. I don't know if Chooks can just show up a bit. He's our director. He controls the MCR, that's the master control room at the back end. So you see we're moving. He's telling the camera 1, camera 2, that's the director, Mr. Tony Wamadi. And that's Anete, he's our market guy. We call him Prof.
I took the back end, just sometime in August.
No microphone for you, Anete. Then we have a very beautiful lady here who is very helpful. She's a copper. She's serving with us, but really helpful. Momolade, we'd like to hear your voice. We haven't heard your voice before. How's it been? What has been your experience? You came to serve. You're from school. and now you are actually seeing the reality. Can you connect what you have from school to, what you've been seeing?
Yes, well, I've quite learned a lot from producing for business. So, and we look ahead, it's like maybe you'll see me on the show. Hopefully.
Hopefully. That's a cat let out the bag. That's a cat let out of the bag. And then we have Olaleye Yesumola. Leye can move forward. He's also one of our assistants who really helps us with production right there. He's refusing to push himself to the front, so I'm not going to say more than that. And we have Tammy. Tammy is the VTR, so the videos you see being played and all of that. And he's the cameraman. He has a headset because he's controlling this camera, so he has to go out there very soon. Chooks. So, and of course to you out there, our guests who go through traffic in Lagos to come to our studio, we really do appreciate you being there. And to you, our viewers, if you weren't watching us, it would be useless doing all of this. So thank you so much for being there for us. For Channels Television generally, we are really grateful. You have made us the best and award-winning station.
Right.
I mean, you vote for us, that's why we win.
Fantastic. Yeah, and we have that bell. It's the final trading day of 2025.
And that's Business Morning signing out from 2025. Thank you so much.
Thank you so much. Let's hear